I believe a person should diversify stocks, especially right now for safety. I go this way during market downturns. You're not going to have a market go forward without technology playing a major role. And right now, technology is on the outs. Right now, uh, Berkshire Hathaway is doing better than the Magnificent Seven, which is awesome. The Magnificent Seven consists of the big technology mega caps of Apple, Alphabet, Nvidia, Microsoft, Tesla, Meta, and Amazon. And they've made 43% since the beginning of 2024. Berkshire has beaten them, though, by making 46%. Now, the reason why it's beating them is because the Magnificent Seven have had a dramatic pullback in 2025. They have fallen 13%. All seven Magnificent Seven stocks are lower in 2025. I don't own any of them right now. I could see the trend. Trump, with his higher tariffs and artificial intelligence, has fallen out of bed. So basically, there's no reason to own these companies except if you're waiting for the market to turn around. And I think I want to see us get through April 2nd. That's when they begin the reciprocal tariffs, and nobody knows exactly how that's going to work out. It's said that Trump is taking a more targeted approach and is being more reasonable. And I expect this just because I don't think he wants a catastrophe. This is being filmed on Sunday night, and the futures are positive, which is good because last week was positive, but the previous 3 weeks were all negative. I think the market futures are up because Trump is saying that he's potentially going to be flexible in his reciprocal tariff program. He did stop short of suggesting there would be tariff exemptions, which would be a very positive thing. The tariffs should be more targeted and not as broad as he's trying to do, which is playing with potential disaster. The Wall Street Journal thinks that the tariffs are expected to be more narrow and will likely exclude some industry-specific duties. The big event Monday will be that BYD will report its earnings on Monday. BYD is a very successful company, and I think it's becoming the major car company in the world, with maybe the exception of Toyota. Toyota has been very wise in their decisions, and they're making a lot of money because they went the hybrid route, but eventually they're going to go electric too. But China is offering driver assisted systems that are similar to Tesla's. There's 4 levels to the driver assisted systems. It goes from level 1 to level 4, with level 4 being no human driver is needed. Tesla is right now at level 2, and most of these Chinese companies are at around level 2, and they're starting to add level 3 features. And they think what's going to happen is the Chinese automakers are going to offer level 2 for free and then charge when they get to level 3 fully. So I think BYD is an excellent stock. Just a friendly reminder that this is not financial advice because I do not know your personal situation. You need to do further research and gather further information to decide if the investments I present are right for you. Looking at the chart, BYD, symbol BYDDY, has made over 46% in the last 3 months. And its relative strength is about 58, which is good. So they had a little bit of a downturn here recently in early March, but then they sprung back up. And I think these earnings are predicted to be very good. So we shall see on Monday. I own BYDDY, but the other exciting Chinese company is XPeng, which is, some say X-Peng. I think that's the way the Chinese say it. To me, it looks like X-Peng, so that's the way I'm saying it. Its symbol is XPEV, and its relative strength is 51, so it's not overbought at all. And it's made 70% in the last 3 months. They've been selling 30,000 cars a month since November of 2024. So this company is it will be profitable, very profitable by the end of this year with that many sales going. And I think if BYD shows significant progress, they're going to go up with it. Oppenheimer's been recommending some stocks that have gone down, and one of them of interest to me was COSTCO, symbol COST, cost. And it always was so expensive that I was waiting for a downturn. And I guess now I have an excuse that this is a conservative stock and its price has dropped about 10% from what I can see. And Charlie Munger of Berkshire was always trying to convince Warren Buffett to buy Costco, but Buffett wouldn't buy it. He said he didn't really believe in retail. That was his excuse, which I think was pretty flimsy, actually. So looking at the chart, the 3-month chart has gone down almost 5% in the last 3 months, with most of that due to a big upscaling up to $1,050 around the end of February, and then it's come down to $909. And I sort of feel like if I'm going to buy it, I should buy it now, but I'll probably chicken out. But we shall see. Its relative strength is 36, which to me indicates it's underbought. I think people are waiting for it to fall even more. But even now, its price to earnings is about 50, and its earnings growth rate is an underwhelming 14%. So this one would be bought for safety only. And I think it's likely to go down, especially if we have a recession. But a recession should favor it to some degree. So you can see I'm deeply conflicted about it. And as long as gold holds above $3,000, which it has been doing, the gold mining stocks like AGI should continue to do well. And in the last 3 months, Alamos Gold, AGI, has made over 42%. And its relative strength is 72, which is excellent. So this seems like a good gold stock to play if you want to play that region. WDIV buys companies, stock in companies that pay high dividends around the world. It pays about a 4.7 dividend, which will mean nothing if we go into a recession. So if we seem determined to enter a recession, I'll be getting out of this. But I'm hoping it's a conservative thing that we somehow make it through this without going into a recession, and that the 4.7 dividend ends up saving you, which really isn't my style. But hey, we're in a downturn until proven otherwise, until after April 2nd. Thanks for listening.